Traders and investors use the economic calendar to track key data like non-farm payrolls and Federal Reserve interest rate decisions. The economic calendar lists events, data releases, and reports that influence financial markets. It shows upcoming economic events over a certain period, daily, weekly, or monthly. Traders, investors, and analysts watch these events closely to plan strategies. Key items typically included in the economic calendar are 1. Federal Reserve or Fed meetings. The FOMC meets several times a year to set interest rates and discuss monetary policy. Decisions from these meetings can cause significant market movements. Interest rate announcements. Central banks, like the Federal Reserve, European Central Bank, and Bank of England, announce changes to interest rates. These changes affect borrowing costs, consumer spending, and investment. Employment reports. Non-farm payrolls are released monthly by the U.S. Bureau of Labor Statistics. This report shows jobs added or lost in the U.S., excluding farming. The unemployment rate and wage growth are closely watched. Inflation data. The Consumer Price Index, or CPI, measures the average change in prices paid by consumers. It's a key indicator of inflation. The Producer Price Index, or PPI, measures the average change in selling prices received by producers. It's an early indicator of inflation pressures. Gross Domestic Product, or GDP, measures a country's overall economic activity. Quarterly GDP growth rates indicate economic health. Retail sales reports indicate consumer spending trends. The Consumer Confidence Index measures optimism about the economy and personal finances. High confidence leads to more spending, benefiting the economy. Manufacturing and services data. The ISM Manufacturing Index shows the health of the manufacturing sector. The ISM Services Index is for the service sector, a large part of many economies. Housing market data. Housing starts are new residential construction projects. Existing home sales are sales of previously owned homes. Building permits indicate future construction activity. Trade balance. This reports the difference between a country's imports and exports. A trade deficit or surplus impacts currency values and economic health. Corporate earnings reports. Quarterly earnings from major companies can influence stock prices and market sentiment. Geopolitical events. Elections, trade negotiations, conflicts, and international summits can significantly affect the stock market. Consumer sentiment reports. The University of Michigan Consumer Sentiment Index measures consumer confidence, indicating potential future consumer spending. Crude oil inventories. Weekly oil inventory data can influence energy prices, affecting broader economic conditions and market performance. Central bank speeches. Speeches by central bank officials, especially from the Federal Reserve, provide insights into future monetary policy, influencing market expectations. Traders use these events to make decisions, anticipating market movements. Timing and impact vary, but they are essential for understanding dynamics.